In buying life insurance, there's basically two options. Click. The most popular option, or one of the most popular options, which is how insurance companies and agents make the most money, is something called cash value life insurance, whole life insurance, universal life. You ever heard of it?
Yes.
Okay. And here's an example of a typical policy where John and Mary have 200,000 on each. They pay 450 a month, and at retirement, they're going to have a cash value of $153,000. Okay? So if they
Hmm.
die, they get a death benefit of 200,000. If they live, they have $153,000 cash. Now, we believe in something called buy term and invest the difference. Have you ever heard of that? Most people haven't.
No, I've heard of the term, but
Why do we believe in this? Well, first of all, because for $189, you can get $800,000 of life insurance on John and 400,000 on Mary. So you can get a lot more insurance for a lot less premium every month. Do you think that's a good idea for people to do to get more insurance for less money?
oh yes.
And then they could take the savings and instead of getting a low return in the policy, they could put it in a Roth IRA in something called a mutual fund, which historically have done 9% or more. And at retirement, they would have $447,000 cash, which is about 3 times more than inside the policy. So if you were buying life insurance and you were married to John and John died, would you rather receive $200,000 or $800,000?
$800,000.
And why would you rather receive 800,000?
Because it would well, first off, it's going to allow me to take care of my family better.
And how important is taking care of your family?
Very important.
So it's pretty obvious 800,000 is a lot better than 200,000, right?
Right.
Is there any way you'd rather have the 200,000 versus the 800,000?
No,
No
nowhere.
way. It's impossible. Okay. Now, if you live, because you're either going to die too soon or live too long, if you live, which maybe you probably will, you're going to have 3 times more money, or about 450,000 versus 150,000 for retirement. Would you rather have 450,000 or 150,000?
450,000.
Why would you rather have 450,000 versus 150,000 for your retirement?
Because I'm going to be able to live in retirement better with 450,000 than 100.
It's real simple, right?
Hmm.
More money, better, right?
Right.
Okay. Now, the greatest thing about this program is that the plan A on the left is 450 a month, and the plan on the right is $450 a month. But the one on
Right.
the right, you get more if you die and more if you live for the same money. So if you were an A, if you had whole life, and you could take the same money every month and get more protection and more cash accumulation, would you switch from A to B?
No. Oh, yes.
Okay. If you were in B and you had a lot of insurance for a little money and you were going to have a lot of money at retirement and somebody could show you for the same money, they give you less insurance and less money, would you switch from B to A?
No.
Never.
Never.
Now, if 10 people were in A and they saw B, how many of them would switch?
All of them.
All of them. Okay. If you could earn, so you would switch, they would switch. If you could earn 300, 500, $800 or $1,000 or more, every time you showed somebody how to go from A to B, how often would you want to do it?
All the time.